Hope you're well. It's where are we? It's Monday the 20th. Let's just see everything is working okay. My audio was a bit dodgy last week at some point. That's fine. Video looks okay. So welcome everyone. It's Monday. It's the 20th of January, as I'm sure we're all aware. And what can I say? It's Trump 2 kicks off today, big time. More on that in a little bit, but. First, let's just have a look at how the markets are coping this morning with the new dawn. I mean, it's such an ironic day. It's Martin Luther King Day as well in America. Civil rights campaigner and remarkable human being. Long campaign for a public holiday in the United States, finally given it a few years ago. And the irony of Trump being inaugurated today is not lost on many of us. But anyway, Bitcoin is our first chart of the morning. New all-time high overnight in anticipation of the man going back to the White House. Here on the 6 o'clock candle this morning, we went to highs of 109.50, 109.500 here on our platform. For Bitcoin. So the holders are smiling this morning. Lots promised from the new Trump administration. A new Trump coin as well issued. Lots of liquidity pulled out of lots of other stable coins over the last few days. But what a bizarre scenario we have. But anyway, technically it trades like any other asset to an extent. Just a lot more volatile, and so we went long here. When was it? It was the 14th. When was that? That was last Tuesday, and I'd pulled my stop loss up on Friday. Those of you that were following us, and we got it reversed back through us last night around about 104, I think, but it's still a nice gain from that move on Tuesday. But that's still obviously very well bid. New all-time highs means it, not necessarily can go even higher. So this potential head and shoulders breakdown under 92,000 didn't happen, or hasn't happened yet, and we're continuing to trend higher, just as we did post the actual election day and election result for 7 days. Remember, we went higher. We'd done that again in small beer to an extent here at the beginning of January, and we've done it here now in the middle of January into inauguration day. So US markets, capital markets are actually closed today. Stock markets are closed today. They had a fairly good close on Friday. We were up 3% on NASDAQ for last week. I don't actually make a note of my closing prices on Friday. It's on my phone somewhere, but we'll have a look at the stock markets in a minute. So Bitcoin to the upside. Let's everyone else's other favorite asset is gold, and we're currently trading back to the 2700 level so far this morning. Let me just let everybody know that I'm here. I'm sure they do. Excuse me a minute. Let's get that. No, everybody's on. Mr. Market meets Trump too. It's an interesting headline in the Reuters business page. We'll have a look at the news pages in a minute. So gold, another strong day on Thursday. We rescinded back to the 2700 level on Friday, but we remain bid and well over our 20-day moving average, as we can see here, which sits at 2770. Our daily trend line from the low on the 19th of December under the key 2600 level is still a way away. We have our 50-day moving average, our 20-day moving average, our 9 and our 5, all nicely aligned. We've had this triple top in forming, so just watch what happens here. Do we break down, or do we continue to move higher and push to that 27.8 or that 27.90? You can see there on the chart. Hopefully you can see that on the chat. We're broadcasting to our colleagues on Instagram today, so our charts look a bit smaller. Let me just make that as big as I can. Get rid of that. Get rid of that. Don't need that. Might be a bit too. If I go like that, what do we see? No, we can't see the charts. Best this way around, I think, isn't it? That's too much of me then, isn't it? Let's leave it like that. We can see everything's going on. Okay, so gold remains bid. The Trump trades are in place. Let's have a quick look at the The indexes, as I said, we closed positively on Friday. We'll go through the last week's trades and Friday night's closes. So let's just go through them in order. The S&P 500, 45,005. Actually, sorry, the US DAX. We can go through some of the trades as well from last week. So we were long here on the 15th. That was, when was that? That was Friday. So Thursday. That was Wednesday's close. Our stop loss was down here. We've pulled our stop loss up over the weekend. First target was hit here at the 50-day moving average. So we took some profits on that. If, I'll just bring up where I've shared that. You join our Discord group, guys. You can see us on that. Where am I? Oh, here. John is on that. So I post this towards the end of the trading day here in London. End of day, EOD, end of day trades. So Mondays, they're there, Tuesdays here. There's that reverse on the stop loss, I should say. I think I said 23, not 20. Anyway. Yes, there's the Dow one there, 80% closed at wherever it was, 43,585. We've still got 20% open. Same with the FTSE, and same with the Dow, with the S&P 500. These are all from Wednesday, these positions. So looking to break this 50-day moving average. Remember, the bigger the number on your moving average, the more difficult it is to break, the more of a support level and a more of a resistance level we've had. Like we can see here, we were under it here for 2 days out of the 4, and then we rallied from it. Here we broke through it very significant with a big candle, but didn't really want to go much lower for most of the beginning of January, and now we've rallied up. Can we break back over this key 50-day moving average? This is a negative technical cross here. It's obviously a lagging, delayed one because it's a moving average. 50 is flat. That's fairly negative trend, really. Haven't had this big rally up. So we're consolidating down here, but a break over here is positive. A break back under the 20 is negative, and our low point is this 42,000 area, really, 41,987. You see that low from the middle of January, from last week, from last post non-farm payroll last week. So the Dow, the weaker of the three major indices as it came down, but stuck at the 50-day moving average. So we're still long on that one. Let's go through the American ones first. The other one was the S&P 500. We took some similar positions on Friday. We broke the 50-day moving average, so it's more positive. You can see on the Dow. There's the super psychological 6,000 level, which we took some profits on that one. We see on the S&P 500, 5998. We got filled in. 80% of our position closed. We still got 20% open. Our stop loss is now up to 59.50 here. So we sit there. That's still looking relatively positive again, but a bit more positive than the Dow because we're actually over the 50-day moving average. Not a massive break, but we are up and over the Dow. Up and over the 50-day moving average and right into 6,000 as well. So see how they go. Remember, these are derivatives prices you're seeing at the moment. I'd say the stock cash market is closed, but that still looks fairly positive. Some big up candles there. RSI moving up quite nicely, and the average true range for the S&P 500 now sitting at 72 points a day. That the ATR, I'll write a little article on that this week, but basically the ATR, the average true range of the countback period. So for the last 14 days, the ATR here is 14. The average move on a daily basis is 72 points. Whether that's positive or negative, it doesn't tell you that. The ATR just tells you what's the average range the price moves over the last 14 periods, and it's 72 points. So people use the ATR for stop loss, setting targets. I use it for both as well. But we're right. The RSI is rising and ATR is relatively positive. So the higher the number, the more the volatility. So if we're in an uptrend, that's positive for the uptrend. But say more on that. I'll read the article and I'll do a little webinar on ATR as well. So anyway, S&P 500 bid into 6,000. Can we break it? Can we hold it? Resistance after that would be at 6,050. You can see here again. This was the middle end towards the end of December. Christmas Day, New Year's Day, Christmas Eve on little volume actually, but so that's might be a bit of a false high. So the moving averages might be your next level really, 60-20 from here for the S&P 500. But we're still long. Stop loss has been pulled up to our entry, so we can't lose on the last 20%. The worst we can do is flat. Right, the trade that triggered on Friday, which I didn't mention to you, actually suggested it might be moving up here on Wednesday as well. Thursday, we declined from the 50 and the 20-day moving average. Remember, we were talking about how these guys had coalesced. So we got a 20 and a 50-day moving average stuck together here. So there's a big, thick resistance area at 21,200, but the positivity on Friday was up there. We'd had some strong banking results. Remember, JP Morgan and Citibank kicked off. Wells Fargo are also very positive earlier in the week. We followed through with Bank of America numbers as well, which were good. And we're now at 21,500. So big, strong day. I didn't take this simply because I wanted to reduce my exposure to the US market. So we're already long. Sorry, I didn't take this immediately on Friday. Once I'd taken my profits, we are now sorry, let me get this right. We're now long the Nasdaq from Friday. I should put that line in there. As we reduced, as we took 80% of our profits off for the S&P 500, and the Dow, we delayed moving this action until Friday. So I don't think I actually put it up last night, did I? We are now long the S&P, sorry, the Nasdaq as of Friday's close. I think we actually didn't get filled on that close, but I think we got filled a bit higher. Around about, yeah, I think it was around about 21,465, I think, something like that this morning. I'll have to check my other system, which is over here. It's not on at the moment. Based on the taking the profits on Friday night on the other two stock markets, so we reduced, so we're not too overexposed, but we've got a full position on that strong candle on Friday, on the significant break of the 20 and the 50-day moving average. That's a very strong breakthrough. It could easily rescind and return to rescind. I've used that twice this morning. It could easily return back to this level, but having shaken out 5%, 6% decline for the Nasdaq, these all-time highs over 22,000 is still on the cards if some of the tech stocks deliver in their earnings numbers. So again, RSI back over the 50 period and starting to rise again. We'll see what happens as the week rolls on. Some interesting data this week. It's not really data driven, it's really sentiment. We'll come back to the Trump 2 story, my view on it for what it's worth as we move forward. So Nasdaq is now long as well. Just while we're on the dollar, the indices, the DAX and the UK markets have opened relatively positive this morning. Let me just go to the hourly chart. So Friday, where's Friday? Monday started here, so we're sort of relative positive territory. The open was in the last 45 minutes, so it's relatively flat, but also not negative, if you like. Yeah, so we're relatively positive in Europe and also in the UK as well. Yeah, I'm just looking at some headlines here. A little change at the open. We'll have a look at the markets in a minute, but again, the DAX, as we said in our Discord channel, DAX was another one of those that we were long. We had a losing 45 point trade that was short on the DAX from last Monday. The DAX here on Thursday, we were long. Must have been from Wednesday. Hang on, what does that say? Thursday. Oh, anyway, I can't remember when the DAX went long last week. When did we say the DAX went long? Was it the same day? Almost might be in the same day. I'm not checking. They're just charts for me. Let me see. Was it? Let me just go back to the daily chart. So DAX. When did the DAX go on? Entry from the 16th, so it was the 16th here, so we must have hit it the following day. 16th, yeah, there we are. It was on Friday we hit it, so we were long from Thursday night on the 16th. There we are, and the entry has now been, stop loss is down here. We've pulled the entry up to sorry, we pulled the stop loss up to entry, and target 1 was hit, and we're still long. So we're still, again, a bit like the other 2, 3 that hit target. The DAX is still long with 20%, and we're 20,900. So obviously 21,000, another all-time high for the German market, as the euro continues to be pressured by the stronger dollar. A caveat on this particular one is look at the extent of the oversportness, if you like, as far as RSI is concerned. For the DAX, we're at 75.8. So 75, remember, anything over 70 is deemed a sort of an overbought condition, but when you've got a strong trend, just because something's overbought doesn't mean it's going to come down. But remember, lots of traders look at the break back down over the 70. It's one key way to use the RSI. And as you can see here, we got overbought here at the middle of December, and then we went down quite nicely. And it was a few days, so the RSI was ahead of the break of the 20-day moving average. We flattened out around about this 19,800 support, and then we've moved back up. You see here, so we ran into the 50, held at the 50, didn't go all the way down to 30, get overbought. In fact, last time we were overbought was all the way back here with the DAX. So we are in overbought conditions, and it's much more overbought than we have been for a while, since the beginning of the spring here, April 2024. And again, you can see what happened there as it came back under the 70. At the moment, we're still long. Our stop loss is rammed up, so we can't lose on this. The rest of our 20%. We'll see how that goes today and tomorrow, and what Trump says to move equity markets globally. So DAX is still long with 20% of the position still open. Excuse me, sorry, coughing into your ears. And finally, on the indices, we had the UK 100, again a long here from the 15th. First stop loss, first target was hit on the following day. Very strong follow through, and we followed through again on Friday, and we're up again this morning, 8,500, close to all-time highs for the FTSE as well, I think, as well, isn't it? 8,000 it must be. Yeah, there we are. Sure it is. 8,500 for the FTSE. Again, the weaker sterling is helping that. Why does that happen? People say, well, 75, I think it was 75, 77%, something like that, of the FTSE 100, the UK's biggest companies, that make their earnings not in sterling. So they bring their profits back from overseas when they cash in their earnings, and a weak sterling helps the earnings and the performance of those companies when they convert it back to sterling from foreign currency, particularly obviously in dollars. So 8,228 is where the FTSE trades at the moment. We took off 80% of our target. It was an end of day, quick to new all-time highs, and we followed through Friday, and we're up again this morning. So that's still open. That's still looking pretty good as well. But again, a bit like the DAX, we are in significant overbought territory at 73, not as high as the DAX. And again, we have been as high as 79 on the RSI. So that's just one indicator, obviously, but the trend is nicely set. So just, as I said, might move the stop loss up today. In fact, I probably will now while we're sat here. Oh, stop loss moved up from whatever it was Friday. Actually, that's at T1, isn't it? So it's definitely locked in more profit on that one. T1 was down here somewhere, wasn't it? I think it was 8,400, wasn't it? Just for complete people shouting me saying it's right. Yeah, 8,395 was where that position was taken off. 8,390. It's a bit higher than that T1, but stop loss is now moved up. You see how I did that? Just moved it on there. You'll see it on the open position, so the lines moved up. Okay, so all the indices doing very nicely at the end of last week for us, and very much in the money. So back to the Forex market and the majors. So Aussie backed over .62 this morning. Let me just let that load. It's not loading for some reason. Have I lost the connection? Hello? It's like I've lost the connection, my friends. Are you still there? Let me close some of these other things down. Can you still hear me, my friends? Nobody's talking to me anyway, so let's have a refresh. It's lost it. Lost my connection. I don't know whether it's my internet. It shouldn't be my internet this time of the day. It's I've got a big fat wide pipe there. The Aussies come up, so hopefully you can still see that. So Aussie dollar. There's our non-farm payroll. January's low when we went under 62 to 61. 40 area, and we just haven't been able to get back over the 20-day moving average on our bounce up. So we were long into the 20 and then down again. But the candles, you can see here on the Aussie, the candles, very indirectional. There's not much body to them. The trend remains to the downside. We are moving. The RSI is moving up here, but we're still very much in neutral zone and very much under the 50 at 43. So be careful trying to take a long position on the Aussie or betting against the dollar at all. Dollar CAD 144.60 again. Through that key 144 level, and I don't know if you we are now long on this again from Friday night's close. I haven't marked it on here yet, but we are long here on our trading platform at 140. I can't remember what time we got. What did we get filled in on Friday? 144.78. 45.01 is our initial target. Stop loss 143.73. I'll update this chart later. I won't do it now. As you can see, these are actually the targets. 145 about there. So just edit that. That was from January the 17th. Is our target now. Okay. Stop loss. What the stop loss was? Dollar CAD from Friday. Dollar CAD 44.78. It's a stop loss. 17th. That was a losing trade. That's 6th of January, wasn't it? 144. What did I say? 144.78, wasn't it? I think. Anybody correct me? No, nobody talking to me, so I wouldn't know. Yeah, so our initial target takes it over the 145 to new highs, and you can see here on Friday, we're still in congestion high. Remember what I've been saying ever since this big up candle and then this big down candle. We're still holding the 20-day moving average. This was key. That was a continuation trade in the mean reversal strategy. This is a new trade on Friday on the trend following strategy here on Friday. See if that plays out or not as we flatten out today. Obviously Canada's open today, but the forex market's open, but the banks and the stock markets are closed for this public holiday for Martin Luther King. And as I say, it just so happens that Mr. Trump is getting inaugurated as well today with many global dignitaries, but not the Prime Minister of the United Kingdom. Dollar yen 156. So we've come back. One of the big events of the week is the Bank of Japan. Many still are expecting that they will move interest rates up for the first time in many years from the low negative interest rate territory. So dollar, which was dollar yen here, which we were of 158 and testing it again last week, came down quite aggressively on that news breaking. I think Nomura were the first bank to talk about the Bank of Japan moving rates up last week. So we're down Wednesday, down Thursday, bounced a bit on Friday from this key 155 area, and we're holding it. We're back over 156 this morning, but as you can see, we are now under the 20-day. So a tentative short was triggered on the 15th on this one. I didn't log that one. It's outside. It's not the end of day one. It's different. Just this simple moving average strategy cross. on Wednesday. Didn't quite get to the 50 period target, 155, but some profits would have been taken off that the following day on that other system. But yeah, and it's not on the, I'm not logging this as a short position, dollar yen, because it's still looking relatively bid, but we'll see what happens. How the trade situation is actually fulfilled from Trump's speech today, and how it obviously impacts the Japanese in particular, and what more, just as importantly, what the Bank of Japan are going to do about their very, very weak yen. Kiwi, this was a short one, also from Friday night, which is actually not the money. If you look at as the trend continues to down, so we might just call it this last leg of that. But again, if you look at Friday night, short from 55.75, 55.35 is our first target. So again, I'll update this. Actually, let's do it. Yeah, 55.35. Oh, let's just do it here. T155, 35 initial target, 30 pips. Like 30 pips, 40 pips. That's T1 from Friday night. So that was. Let's put that on. I'll update all this later. What do this now? I've got you guys here talking. So that was short on Friday. That's T1. We got in round about there, I think, didn't we? Settings, text. T1 from Jan 17. Okay. Oops, it's on the wrong one. That's right. I'm trying to do that. I'll come back and fix that later. But anyway, yeah, that was a short position on the Kiwi on Friday night. More importantly, euro and sterling. Euro 103, still under the 20-day moving average, but as the 20-day trends down and comes to meet it, the bounce up from this January 10 low when we went to 102.92 under 103. We are technically we're testing. However, that alignment is still very, very strong, and just hang fire. We're consolidating at lows. We may sort of start to break up, but we've tried it a few times. It hasn't happened. RSI is moving up, but we're still woefully below the 50 at 43. We're at 44. RSI is now, but still negative. So this line here, which represents 103.30, a previous support level, and that intraday low that we'd identified back on the 22nd of November becomes is still obviously the key area, and that's where the 20-day sits now. So 103.30 needs to break significantly, but more importantly, we need to hold above 103. We're currently 103.20 today. So today, relatively positive, but yeah, still consolidating at lows. So going forward this week, if you want to drill down a bit more detail on the euro, we're still the short is still on the market is still short. The 4 hours piffed up through the 50 a few times, but come back down. We had quite a volatile session on Friday's data, and we've been up into close, and we're positive again this morning. But there's that 103.33. We just looked on the daily time frame, providing key resistance to the upside. So 4 hour trader today, an intensive long here overnight in Asia as we went over 103, and the hourly trader was being long a similar sort of time here 2 o'clock, and then followed through here at 4 o'clock. Europe hasn't really given us a lift at all. There's the cash open. We're actually down this current hour, which is just finished. We've just gone through 9 o'clock here in London. So we're down again, but it's still bid to the upside. Stop loss now would be round about there. The entry candle would have been here. Stop loss, actually, I'm saying now, yeah, maybe it's a bit too close. I'd have had it bottom of this candle after this retrace. That's 103.2. and we trade at 103.10, so a few pips possibly still in that. Are we going to have a go at 133? We'll see today, but we're still positive euro dollar on the hourly chart to start the new trading week. Sterling back under 122 this morning. 122, 123 was, remember, the 2024 low, and we're 100 pips below that. Again now, and again similar pattern, a weaker pattern to the euro. Big turnaround here on the cash open. So unless, I don't think there was any data, unless some news I might have missed, so I've come to wait for you. But the long here has turned around. That would have stopped you out if you'd been trailing your stop loss up, and yeah, might have had mine here at the 50-day moving, 50-hour moving average as we've moved up. But certainly got a bit of, where would you have got in? You wouldn't have got into there. You would have got, yeah, so there's a few pips in that this morning, but that's turned short, and that's looking, sorry, it stopped out the long and also triggered a short as it's gone through the 50-hour and back under the 20-hour. So that's short now from 121.93.5 on sterling, and it's gone back under the 50 as well. So negative from 4 minutes ago. That my hourly system trading this would have triggered on that one. So sterling short on that one. And finally, oil, big old rally, starting to cool once the the news is finally out. So there was obviously all the chatter last week of the Hamas Israeli peace agreement that was agreed, came into force, not without more Palestinians dying over the weekend. 17 when it was delayed for 3 hours, and there were still missiles fired into Gaza, just because the Hamas couldn't name the three ladies being released yesterday. Anyway, the exchange of prisoners is happening. The hostages are freed, 3, thankfully. 3 female prisoners were the first ones to be freed yesterday. There was an British Israeli lady, one of them as well yesterday, thankfully. So anyway, I'm gibbering on. So oil has come down on that news, basically, that was going to get done. So we went to 79.50 and we're back to 77.50 currently. So the 20-day moving average is now approaching the key $75 level. So this still remains bid to the upside, and I don't know if we took some profits, didn't we, when we got to here on Friday? We were talking about last week, weren't we, around about this top level. We were worried about this, but we'd broken through 76 quite significantly, and I think the remaining trade on that would have taken us out in the last few days as we come back down. Okay, so if this holds, we move up, could have a continuation trade on that one, but certainly I think the first move up has now all been closed out on oil. Again, it's not one I put on the system, or I hadn't put it on the system last week. So there we go. There's another example of getting a bit overbought too quickly, and RSI coming back down on Thursday. Friday we were low, Monday we were also lower. Yeah, there's RSI spotting that move low. So that's the markets for Monday. I say it's relatively quiet as it's a Monday anyway. Asia's been relatively flat. If we look at the headlines here, the main business market headlines from on the Reuters platform, the Bloomberg platform, obviously all about Mr. Trump. So what does it herald? What does it look like? And what's my view on it? That's what it's worth. Obviously, the Trump trades have been in position. The Trump trades have been on for a while. Expectations around the economy, they're focusing on the economy. Let's bring in the euro. So we're looking at a chart. Focusing on the there we are. The economy and America First policy are prevalent. Remember, the trade tariffs are still very much on the agenda. We're expecting something on that today. So trading both enemies and friends under the spotlight. How big and aggressive the actual tariffs will be when they come into effect will be a big issue as well. But everywhere from China to Europe to other parts of Asia and Latin America are all on standby for trade relationships. Remember, the consumer, the US consumer has been the key driver of the support of the US economy as the recovery has gained pace. A lot of that has been on cheap or buying stuff. A lot of that is imported, and the price of that has been meant that those consumers have been satisfied. If prices go up too much on imported goods, does that mean that the US consumer will turn to US-made goods? Who knows? Not necessarily. Will the US goods be able to compete on quality and price and service? How much money is floating around to do that? We'll see. And remember last time the tariffs we talked a lot about tariffs. We talked a lot about supply chain disruptions. Trump probably would have had a second term in 2020 if it wasn't for his political nous as far as the COVID crisis was concerned. Was caught out there and the people around him. I mean, economically, the US has done quite well in the last 4 years under Biden, but the perception of it has been the rise in prices and the rise in inflation. And it's Main Street, the average small business, the average consumer, again, in the US, although he's been, or she, they have been spending quite heavily in support of the US economy. It's the feel good, the sentiment thing that we talk about all the time in markets and trading that hasn't gelled. So Trump was broken through the relatively good economic news and hit his core voters, which never flinched. And he's swept up a lot of particularly male working class voters, which has got him back in with his very, very strong mandate. Remember, the Republicans won both the House and the Senate. So unlike last time when he was putting his executive orders through, and there's lots of those expected today, that were getting blocked by Democrats in the House, that won't happen this time. The more outrageous demands or requests coming from the Oval Office may be questioned or have some sort of a check, but most of what he wants to do will get put through because he's put in loyalists and committed Trumpites in place. And then there's the whole money that's backing him from the Silicon Valley, for everyone from Elon Musk down. So it's a free market. Economists are in place, and the thinking is, cut government spending, cut taxes, cut regulation, free up the market, free up the businessman, free up the spirit of America that made America great, and let's make America great again. That's the rhetoric that's got him where he is now. Let's see how it all pans out. Obviously, a lot of that crypto rally, if we just go back to crypto, I go back to Bitcoin, isn't it? The major example of that has been an all-time high for this digital currency. So see how all the other cryptos work, these stores of value, these trading outfits, these stable coins, particularly the Trump coin that he's issued over the next probably over the next few days and next few weeks is the immediate reaction. But how the markets deal with it, we shall see. Remember, it wasn't they did okay last time. Markets continued to rally in the Trump era. Inflation came down, unemployment came down, but then we were hit by this black swan that was the COVID crisis, and the politics and the institutions within America are there to support the American people. Perhaps came up a bit unstuck because of the lack of investment in them. So we'll see how the next 4 years pans out. He's going to be the oldest president ever when he quits in 4 years' time. This is his second and final presidency. So he's going to obviously want to leave a legacy. Many of his foes from before are not there. Europe remains a sticking point, but Xi Jinping is still very much in place and look like he's even more even more cemented in his position in China. Putin is perhaps coming to the end of his tenure, but very much in place. Netanyahu in Israel under pressure now because the ultra right wing have quit from the ceasefire agreement. So 3 members of that of his coalition coalition cabinet have come apart. So how that pans out. So the 3 major areas, obviously trade, immigration, and then the geopolitical crisis, potential further crises around the world. So the situation in Israel and Hamas ceasefire agreed yesterday and in place, exchange of hostages over the next 6 weeks. Complete devastation in Gaza. How that gets rebuilt or doesn't get rebuilt is still open to question. In Europe, the trade relationships and the political relationships continue to be questioned. The Trump-like thinking, politically on the right, that's gaining momentum in many parts of Europe, Italy in particular, Germany, France, all with their own right-wing parties. UK as well, strong move for Farage and his Reform group. So again, see how all that pans out. It's obviously driven by investment and money to help colour people's opinions. So see how that pans out. Obviously, further east, we still have the war in Ukraine grinding on. He's promised, he reckoned he could fix it in 2 or 3 days. We'll see. We'll see what his relationship's like with Putin. Obviously, the Ukrainian army has been pushed further into the Kursk region in Russia, but the Russians still occupy well over 20% of the land of Ukraine outside of Crimea, which they took under Obama. So yeah, all that bloodshed continues. Obviously, North Korean soldiers now fighting for the Russians. And then there's the unknown. So there's, as I've mentioned, North Korea. There's relationship. He seemed to have a relatively good relationship with the Kim Jong-un. He's drifted off the global agenda. Perhaps Trump being back in the White House will bring him back on that global agenda, or empower him to perhaps fire a few missiles into the South China Sea, the Sea of Japan again. Venezuela. Again, they've slipped off the agenda. Big support in Argentina and Meleni. So yeah, Harold, a big move. The reason we focus on obviously the United States is simply the biggest economy, only superpower still, and as the old saying goes, when they catch a cold, it affects all of us. So the new Trump era starts today. See how it impacts us all. But as far as the markets are concerned, they'll go up and down as they normally do. As a trend following trader, I will take what's on offer. I'll follow my rules. I'll follow my process. And we make money, we lose money, whoever's in the White House ultimately. But uncertainty certainly lies ahead. Could be even more chaotic than it was last time. Who knows? But it certainly won't be quiet with Mr. Trump back, and some old scores to settle as well, which he's promised to do as well. Which we'll see. Obviously, immigration is the big issue that also hindered Biden and Harris's re-election, or the perception of the leaking of the southern border in particular, hundreds of thousands coming over. So see how they deal with that. Will they, will it change things much in America? They do get really aggressive about trying to round up illegals or anybody who's not Native American. So anyway, politics and markets are quite difficult to unwind at the moment with everything that's going on in the world. So anyway, as far as the rest of the data this week is concerned, A relatively quiet week. As I say, the actual markets are actually closed today for Martin Luther King Day in the United States. Tomorrow we have the jobs numbers out of the UK. The data in the UK has been pretty woeful recently. See how that adds to it or not. Similarly, in Germany, we got the sentiment numbers, the ZEW numbers tomorrow morning, and then tomorrow afternoon I'll be live for the Canadian inflation. Obviously, politically in Canada, it's been a bit of a whirlwind as well. The Liberals look like they're going to get a significant I'm going to say slapping up, but a significant routing in their up and coming elections. Mark Carney, former Bank of England governor, maybe is a name that's bounding around to lead the Liberals, but it looks like the Conservatives will take control back in Canada. So see what the inflation number looks like in Canada tomorrow. Overnight, also New Zealand inflation. Wednesday, again, relatively quiet. We've got Miss Lagarde and the leader of the German Bundesbank, Nagel, with speeches on Wednesday. Thursday sees the weekly claims, retail sales from Canada, and overnight CPI from Japan. Overnight, Thursday into Friday, we have the probably headliner on the most important announcement of the week, the expectation that you see here on the calendar that the Bank of Japan will actually raise rates for the first time in many years, still very, very low at 0.5%, but they're into the positive area. That's why we've seen a bit of a move in the Japanese yen, and also the Japanese stock markets come down quite significant all-time highs. And then we start the round of PMIs that start at the end of the month, and then next week we have the PC price index out of the United States. So manufacturing PMIs on Friday, as well, some services PMIs and some home housing data from the US. So Fridays, so Friday morning here in Europe, the announcement from the Bank of Japan, and then the PMI data across the globe follows that on Friday as well. So a relatively quiet week, Bank of Japan, but lots could hinge on what Mr. Trump says, or President Trump, 47th President of the United States, says at his inauguration speech later on today. Inside, because of the very, very cold weather. The last time that happened was 1985, Reagan's second inauguration. So another strident conservative that changed the global economy in the 80s, along with Thatcher. But then that was a very strong North Atlantic relationship between Thatcher and Reagan personally, and then economically we're very much on the same sheet. We haven't got that across Europe now. Certainly the UK, and America talk about that special relationship. That doesn't seem to be the case with Keir Starmer as Prime Minister of the United Kingdom. Trump hasn't got many allies in Europe. Truth be told, Macron smiles a lot, but the relationship is very fraught, and how long Macron's going to survive is also potentially questioned. Scholz is under pressure in Germany. The Meloni in Italy is probably the most aligned with Trump's thinking. Yeah, we'll see how we go. So yeah, very interesting times we live in. So all around Mr. Trump, there's a potential pivot there. So the 21-25 could be a key day as we move forward to Trump 2. So take care, everyone. I'll see you tomorrow for the Canadian data, and we'll be analysing and responding to anything, and the markets will do so as well. So be careful if you've got open markets. Keep those stop losses close, and watch out what's going on. Remember, here at thePropTrade.com, we're here to help you. Somebody was asking over the weekend about placing positions. So let me just open something arbitrarily, because somebody was asking about placing positions. So let's just say we are looking to place an order on this first one up here, ADA USA. It doesn't matter what the asset is, okay? So let's say we want to buy this, okay? So we're going to place, let me just bring up the order panel up. There we are. Can you see all that? I want to bring it out. Come on. Okay, so there's two ways of doing it. We either this is for. Oh, let me find a lady that I see. Akpeen. I don't know if you're still here, Akpeen, but this is for you, my friend. Okay, and anybody else, and I'll contact you on Discord directly as well. So just come and watch this later on. We can watch it there. So you can either buy at the market, which means the current price. So this is what you can see here on the right hand side. This is the bid and the ask price for this particular asset. It doesn't matter what the asset is. So we want to place a buy order, or a sell order. So we're going to say a buy order. So we highlight this one, and there's various ways of doing it. Okay, so you've got to decide the price you pay, what size of a position you want to pay, how much risk you want to pay. The particular question was about risk. So what you can do here with the trade locker platform is decide where you want your stop loss to be, where you want your take profit to be, and then you can work out, how you want to work. Do you want to work it on a numbers basis? Do you want to work it on a dollar basis? Do you want to work it on a percentage basis? So let's say we're going to place our stop loss. So what are the numbers? Let's just arbitrarily just put a number in. So we're going to place our stop loss at I don't know, 10. Where are we now? We're trading at 107.85. It doesn't really matter, does it? And let's say 103.50. It's going to be our stop loss. And if we trade one lot, this is telling us that we'll lose $5 or 0.5 of 1%. So we can say, well, we can do more than that. So if we trade, let's say 8 lots, we're going to lose $50. So what you can do is change this to 50, and it tells you, $8 means it's less than half of 1% of your account. Alternatively, if you change this to, I don't know, I want to change this to 2%. I want to change 2%. I'm going to lose $200, and my stop loss needs it would be all the way down here at 82.70. If I'm trading 7 lots, okay, you can see how it's changing as we're changing it. So it's up to you how you place the stop loss. Technically, you can place it based on where you think it needs to be. So that's the low, isn't it, of this? What is this? Is the last few days. This has been our January low, is around about here. So our stop loss there is where I want my stop loss. So I want to drag it up. It's not moving. Why isn't it moving? I want it 101, so let's put it back. So we want it 901. 1. Here, we're going to risk 1%, go 13 lots with my stop loss. Stop loss gone here, not there. So come buy there. Okay. So similarly, you want to take we're going to put our profit level here, and I want to make $50. And it moves my take profit up to 1,265 to make $50. I could with 13 lots. If I then reduce my lots to 1, we go to hang on a minute, what's happened there? 158. That's not work. So my take profit at 1.2. There we are. makes me $11 for one lot. If we then make that like 5 lots, we make $57. So you can change the parameters according to your particular type of approach. I'm risk averse, so I like to do it on a risk basis, on a percentage basis, rather than on a profit basis. So as you can see there, you can set both profit, take profit, and stop loss. Again, it's up to you how you do it, but I'm very much, old ways was set and forget, take profit, stop loss on. Now I've changed a wee bit. Certainly, every trade has a stop loss, and if a profit is running, I tend to scale in, scale out of that, and leave it that. So it's very easy to apply. I won't place that trade, and you can play with this, amending your prices as and when, and your levels, and you see it shows you on the charts and telling you what sort of levels of percentage of risk you're likely to take. So 1% loss, a 1.4% gain if that is hit on your account. This is based on the current equity of 10,400. So obviously, depending if this is 100,000, this would be different. If this is 50,000, obviously the actual numbers will be different. But the key thing is to trade with the percentages, because you're always then in the right mind. You're not looking at actual dollar terms. You're looking at how much have I gained, and therefore, tend to try and focus on the percentage numbers rather than the actual dollar gain on that. Okay, so I hope that's helped. Have a play with it. If you've got any questions, let me know. You can do that. I've just demonstrated with live markets. You can also set pending orders as well. So you can do exactly the same thing when the price gets to a certain level, whether it's a buy order or a sell order. And again, you set your stop loss and you take profits accordingly. So you can either set orders for prices to get to levels and then trigger, or you can trade immediately at the market with a market order. So market orders, pending orders, very simple to apply here on the Trade Locker platform. Similarly, putting your stop loss, your take profit, your risk levels, all very, very easy to manage, and manage your lot size as well. But again, try and keep the lot size even, and it'll tell you what sort of levels of percentage profits you're taking on your individual trade. So if you've got a bigger account, you've got more trades open, you can play with the risk levels as your trades progress. Okay, that's all for this morning. I've gone on a wee bit longer than normal for a Monday morning, but do take care. Do watch the news floor. Trump is due to be inaugurated 12 o'clock US time, I think it is, and obviously his speech will follow that. News channels around the world will be following that, as well as the market. So take care. See you all tomorrow, and have a great day. All the best, everyone. Bye bye.